Good morning, everyone. My stomach is telling me that it's almost lunch, but I assure you that we are very privileged to have an amazing panel that will really provide us with insightful perspectives around how to increase investments towards orange and more gender-responsive climate finance. I think looking at the poll, right, well, unsurprisingly given who's in the room, it comes out as outcomes and impact first. Having ANZ having been a placement agent for the series of women's livelihood bonds and interacting with investors over these years, and of course leading a lot of sustainable finance transactions, I might say that that's not necessarily impact first for investors, but they do want impact to be there. So there has to be a balanced equation between return risk and impact. In this, we've heard in the morning also that, what was it that Ambassador Campbell mentioned? There's no green without women. We've heard around what the needs of women are around the world, access to capital being one very clear one. So I think I would really want us to explore how we can scale that. There have been seeds of orange movement bonds starting to emerge in the market, but let's be honest, we need much more. One IFC stat that I was looking at this morning was saying that 2% of climate finance is gender responsive. And climate finance is just a drop in the ocean of total global finance, right? So if we are to calculate how much finance is gender responsive, we possibly will have many 0.00000 out there. So definitely, given all the imperatives that we've heard this morning, something is missing. So if we could somehow on this panel unpack what's the missing piece and what can the audience take away in terms of bringing this movement to scale. Does that sound okay to everyone? Okay, perfect. So let me dive right in with a few questions. Maybe I'll start with Gareth and I'm biased because we partnered on the WLB series for a few years, and Clifford Chance has contributed to that pro bono, so I think we are all thankful for that. How did you see from your perspective the evolution of the WLB series in particular and the orange capital movement, and what do you think is needed to scale that a bit more?
Sure, so thank you, Mara. I should say it's an amazing panel and a lawyer, so we'll work on that basis. But I mean, I think certainly in terms of the orange bond, I mean, it's been amazing to see how that's developed over the years. I mean, I think back to WLB2 was, if I recall correctly, I think it was a $12 million deal. And then compare that to WLB6 last year, which was a $100 million deal that was sold to institutional investors in the United States. It was structured to comply with fairly complicated US federal securities laws, EU and UK securitization laws. So really quite a sophisticated instrument, and one that, you know, as everyone has been talking about this morning, has really sort of created its own asset class. So, you know, I think there's a great deal to learn from the women's livelihood bonds journey over the years. In terms of the second part of your question, when we talk about how do we scale that, I mean, I think really we should look at what the WLB has achieved. And I think in a phrase, I'd say capacity building would be key. We'll talk about regulation later. No one likes talking about regulation except lawyers. But I think it really is capacity building. I think it's having the investor community, the buy side, really understand what it is they are buying when they are buying an orange bond. We all know, or to a large extent, I think we know what a green bond is, but it's not necessarily the case with an orange bond, right? And we advise on a number of ESG-focused bond instruments in the Southeast Asian region, and a big driver of those, invariably, a big driver of those on the buy side is that investors are getting access to the inherent credit growth story of the global south, right? So that is that's direct access to that growth story which is quite compelling. And I think we've seen that in the transactions that have taken place across the board. And when you layer on top of that the sort of the gender lens investing that the orange bond gives you, and the inherent credit quality that that brings, that is a really compelling story and a compelling narrative. So I think in terms of trying to scale that, ensuring that there is information, forums like these types of events, really will be critical to make sure that that capacity gets built over time.
We definitely need to spread the word more around the structure that the orange bonds provides. And we see investors wanting credible but also innovative instruments in the market. And the way that, for example, WLB was structured was quite an innovative blended structure, because we were talking about blended finance that is quite scarce in the market, actually. So, Anna, bringing it to you and the Swedish government's role in the WLB structure was quite crucial in terms of offering that credit enhancements that attracts that private capital. But broader than that, I really want to hear from you. I know Sweden and Sida in particular has long had a history of promoting gender equality through your funding, for example, and development cooperation programs. So how is that going? What have you achieved, and how do you see this orange movement moving forward from the perspective of the role that agencies such as yours has in catalyzing and incubating such wonderful ideas?
Thank you. Okay, now you can hear me. It was interesting to hear this morning about Mary. Stephanie talked about Mary. We also heard Natasha talk about the important role of women in development in general. And I think Sweden, through our development aid, has worked on gender equality for a long time, and this is not really news to us. And for me, it's so puzzling that we are in a critical moment in time today where the progress towards women's empowerment and equality is really being threatened. And we see that very, very clearly. We see restrictions on women's rights, shrinking democratic spaces, and growing threats to social justice. And that is the case in this region as well as in Sweden and globally. And this, of course, has great impact on our economies, the communities, and on our planet. And when we looked at this region, looking at the Sustainable Development Goals, we see very slow progress in most of the 17 goals. But when it comes to one of the goals on climate action, that is the 13th goal, we see a regression. We're actually seeing things moving in the wrong direction. And this is really, really critical. And our role in development cooperation is to try to assist countries in this region to work towards changing this momentum. And we do that through a number of programs, including program with UNDP and UNDCDF on climate finance. And within that program, gender equality is very high on the agenda to make sure that gender is looked into thoroughly. And in order to change this momentum fast and effectively, we need a gender transformative approach. It's absolutely essential. Now, when it comes to channeling investments to this end, we also have other instruments that we've used for some years, and that is using the guarantee instruments, whereby we can share some of the perceived risk in gender and sustainability bonds in order to make them more appealing to private investors. And by applying the guarantee instrument, we hope to encourage bank, asset managers, and different kinds of investors to innovate and create new products, to go beyond business as usual, to support gender equality, sustainable development and financial inclusion. And here, our collaboration with IIX is a great example of how we do that. We've been partnering for the women's livelihood bonds since 2022. And it's really a pleasure to see and be involved to follow up on the achievements of these bonds, and also to see our partnership grow over the years.
Thanks, Anna. Definitely there is, and I've seen it throughout my, let's say, development career. I've worked on projects funded by Sida throughout Southeast Asia that 15 years ago were focusing on gender transformative action. So, and what was really unique was the encouragement around multi-stakeholder consortium and collaboration. So it wasn't straight funding to one organization. There was always a multi-country, multi-stakeholder approach to the way that you encourage development funding. So that's something that I always appreciated about your approach. But within the funding such as that you provide and that DFAT provides and so on is so instrumental in providing that confidence to investors. And Taimur, I'll switch to you now. And I've heard that you personally, individually invested in one of the WLB earlier on series. So I would be curious to find out whether you thought there was a sound investment, but I won't put you on the spot now. Let's talk about your role at DBS and how DBS views gender-responsive climate finance and how that fits within the funding that you facilitate.
Sure, but I do want to talk about my experience with WLB because it was a fantastic experience. You know, when the question came up on the screen earlier, what are your considerations? I saw that default and liquidity risk was a distant third. But to those of us who had WLB during the pandemic, that was the first concern. And I remember asking Rob repeatedly that all these do-gooding projects that you have in Cambodia, elsewhere, will these women be able to furnish their debt? And what is your capital management strategy and what is your risk management strategy around that? I know that there are certain pari passu guarantees, but we really don't want to go there. We want to know whether these projects can be viable through this incredible once-in-a-lifetime crisis. And hats off to you guys, you managed the risk, and there was absolutely no question of uncertainty on coupon payment. So no, in a time when rates were zero, that 4% return on the WLB bond, fantastic. So the question is of scale and of spreading the wisdom of gender lens investment, which I think personally is an easier sell than a climate-related lens. Climate-related lens suffers from the tragedy of commons. If I, as a country, reduce my emission by 20%, and my neighboring country doesn't do anything, system-wide, you could argue emissions going down, and that country is benefiting from my hard work, and I'm really not benefiting from theirs. In the case of genderless investment, there is no such problem. It is about improving your absolute standards, and there is no question of the tragedy of commons as far as genderless investment is concerned. Now, at the macroeconomic level, when we as a bank sort of try to look at investment and investors with gender lens in mind, the macroeconomic case, so easy, right? You have more women in the workforce, by definition, tautologically, your potential GDP growth rate goes up. But what about the microeconomic evidence? Can we show listed companies, if they have more women in their boards, tend to outperform? Can we show at the very micro level, the kind of stuff that IIX does a lot, can we see a fundamental improvement in the societal value added if indeed there is investment going on there? On the corporate finance side, thankfully, we now have good data. To those of you who have access to Bloomberg, only just 2 weeks ago, Bloomberg Intelligence released a massive report on looking at listed companies and boardroom participation across the world, EM, DM, Asia, Europe, US. And it shows very clearly with robust findings that 200 to 500 basis points and upside in listed company performance can be seen on companies that have a higher proportion of women on the board. Again, this is something that we should have had a long time ago. I'm glad the work is being done, and that sell, that why should an investor buy? Why should a bank like DBS be involved in not just making money, but making money with a gender lens in mind is because making money becomes easier if you have a gender lens in mind. So I think kinds of things that the Orange Initiative is doing, the kind of thing that beyond NGOs, multilaterals are doing, very encouraging, and we have better data now. Bloomberg has this thing called Gender Inclusion Index. So DBS has been a part of that index, I think, for the last 5-6 years. But those things are, again, at the top level. What is your HR policy with respect to hiring? How many women do you have in positions of power and in the board level in your bank? That sort of stuff. But I think beyond that, at the societal level, the gender lens part, the wisdom of the investment, I think is becoming more apparent. We have better data. So that's where I sort of stand, and I think that this Orange Summit is happening at a very good time because you have this sort of headwind coming toward DEI type investment out of the US with January 20 very close by. But I think this sort of data tells us that when we look at investors in Europe, when we look at investment opportunities in Asia, there is a meeting of minds that doesn't have to be clouded by what's about to happen in the United States.
Yeah, hopefully. Just staying with you for a second, one thing that we observe in the market is that there's relatively slow adoption of the orange bond. I mean, we need to be frank about it. There are great initiatives, but we would like to see an explosion similarly to the green bonds and the broader GSSS market. What would be some of the strategies that, and maybe later, Gareth, you can respond to this as well, to encourage more issuance of such instruments? Because we do see that there is investor appetite. There are investors that have very clear mandates around climate. Integrating a gender lens to that would only strengthen that mandate, and more investors that are looking at gender responsive financing. But we don't see enough deals in the market. We don't see enough of such bonds being put together. So how, are there any conversations within DBS with your customers? I know we have them in ANZ a lot, but it's a very long stretch conversation in order to bring such an instrument to market.
No, it's not been easy. Even during the time when, I think it was WLB2, where we were trying to market it to our clients at DBS, it wasn't an easy sell. We were all there in those days. I think there is no magic solution to this issue. It is better data, better nomenclature, better taxonomy, accounting standards and reporting standards, and more transparent way of reporting. All the boring stuff that accountants do are, I think, part and parcel of how to make orange-related investment a part of day-to-day investment screen of an investor. But I got to tell you, I was all over Europe last week, meeting with credit funds. There was no question of discussing orange-related issues, but it came up in the context of ESG. So when I meet with European insurance companies and broader range of asset managers, there is massive top-down mandate on increasing allocation, on green, on orange, and by and large, ESG has become a dirty word in the US, but it's definitely not a dirty word in Europe, and there's no coyness on the investor's part when they talk about ESG. That is very clear and welcome discussion. The view was, especially again in the context of the US, if indeed we see some sort of a DEI backlash in the US, does that actually open up opportunities for issuers in Asia? Because so far, European investors tend to think of some of this ESG stuff within the DM complex. They'll invest in Europe, they'll invest in the US, and maybe on the fringe there is some EM investment. I think what I picked up from the investors last week was that they're looking increasingly in EM in general, but Asia in particular, because it's a large part of the world, about what are the ESG offerings out there. So again, I think some of the Orange Initiative is coming at a good time. So we can dwell on why it hasn't worked over the last decade a lot. I don't think there's a lot to learn from that. I think it's just a question of harnessing the boring and important accounting aspects, reporting aspects, and then go out and meet these investors and show them what's there.
Yeah, I think we shouldn't underestimate the power of structure and boring things that basically de-risk investors to come into a structure. I want to bring it back to Southeast Asia and Indonesia. And Razaq, PNM, I've heard that oversees the largest women-focused financial portfolio in Indonesia. correct? Targeting underserved sectors like micro businesses. We'd love to hear more about that, and how are you integrating gender strategy within your investment mandate? And well, what we want to hear is how can the Orange movement support you in your mission?
Okay, thank you, Mara. So actually, PNM, the Permodalan Nasional Madani, we are part of state-owned enterprise, and actually we are established in 1999, but we just started focusing on women since 2015 through our Mekar program. Mekar in English is blossom, because we have a philosophy that if we care about the women, they can growing and they can be blossom for their families and their communities. So currently we have like 15.6 million clients, all women. 66% is under 45 years old. 4.4 million is categorized as the extreme poverty. And if we using the poverty line of the upper middle income country, 51% is still below poverty lines. And this year, we already disbursed around 3.2 billion US dollar for the loan for these women, for these 15.6 million women all over Indonesia. And the interesting thing is, actually, a few months ago, I just recently know about the orange things, because of my lack of knowledge. Previously I just only know about the sustainability bonds, only about the green bonds, but we never know about what is the orange one. And then when I read about the orange, so it means that all of our loan is orange then automatically, because it's already focused on women, underprivileged women from the poverty, poverty level, from the poor family all over Indonesia. Even our account officers, they are also from the same economic level of these women. So we recruit our account officers is just the high school graduate, also from the poor family, from the local community, because we want that our account officers have the same frequency with the women that we take care of them. And in PNM, actually, we are not only providing a loan for this woman. So because we believe that stronger the women, stronger the nation, so we be providing like 3 kinds of capitals. So we provide the financial capital, that's the loan. We providing the intellectual capital, so we have like regular training, empowerment program from the basic level and also the advanced level for the clients. And also we have what we call as social capital, the networkings, facilitations, the exhibitions and everything. Even right now, we are trying to target the mindset of our clients. Because I think not only Indonesia, in other parts of the world, when we try to develop a product, we always focus on the accessibility and everything. But then somehow we forgot the psychological barrier of this woman, their anxiety, their inertia from their culture and everything. And this is now we want to target it, because even in our clients, most of them, they already have like 10 or 7 times of our loans, but they don't want to get a bigger and bigger loan, or they don't want to make their business bigger, because they have the anxiety, they have the inertia, they have the barrier from the family, from the cultures. Because like in Indonesia, some of their husbands, they disapprove the loan, because they fear that if this woman become more independent, if this woman have a bigger money than the husband, they will file a divorce, because they think that independent woman, they can do everything that they want, and then the ego of the husband is become lower than the women. It's very interesting, the cultures and everything. So that in PNM now we try to change the mindset, not only the mindset of these women, but also the family, so they can grow together, and then the family is still happy together right there.
So it's great to see the impact that this capital has when you go really to the individual. And I would take a bit of a different view around, rather than maybe if we look at the multiplying effect that investing in women has, maybe another effect would be that men upskill themselves, contribute more to the economy, increase their income as well in order to compete. So ultimately, overall, I think it's better that it does lead to a cyclical positive reinforcement there. Gareth, how do we support organizations like Razaq's here around with the right frameworks, rules and regulations in order to really direct more capital towards what he's doing?
Yeah, it's obviously a great question. I think just to pick up on a point Dr. Taimur made is I think something we do really need to recognize is that ESG investing and DEI specifically is under threat. I think that is something we have to confront. The United States is still, for better or for worse, like it or hate it, the world's deepest capital markets, and this is going to present some real challenges, right? It's not just what's coming, it's what's been. If you look at a number of the Supreme Court cases that have come down over the last couple of years, perversely, you have lawsuits now that are challenging DEI, agenda-based DEI targets on board levels for SEC-registered issuers based on civil rights legislation. So, yeah, it's a real concern. The upside is that all regulation is ultimately local, right? So again, to your point, we don't have to worry about what's happening there. We can look after things ourselves, right? So it's up to each country and the policies of that country to determine the direction it's going to take. And I think the best way to describe that would be to say, essentially, you look at it as a carrot and as a stick, right? On the carrot side, there's a great deal that can be done. Conscious, and with apologies to anyone from the MAS or the IRAS sitting in the audience, but if you look at what Singapore has done over time with things like the Green Bond Grant Scheme, providing those types of incentives, that could be real positive. You have the QDS regime in Singapore, again, providing concessionary rates for investors. It's those types of policy instruments that can really be used to sort of drive that, if that's a real desire. We talked earlier about perhaps creating indexes, having an orange bond index, right? If you have that, of course, to your point, that needs more issuers, so that's part of the problem, I suppose. But again, once that happens, that's greater liquidity, there's greater visibility there for investors. So there's a huge array, I think, of policy levers that's available. There also needs to be a stick, though, and this is what no one likes hearing from lawyers, but I also think enforcement is going to be a key issue as well. Taking green bonds as an example, right? We say, well, fine, this is going to be our use of proceeds, and if you don't use it, as you've said, and there's the myriad examples, regrettably, of greenwashing, there isn't really a sort of a legal or regulatory sanction there, right? It's market approbation. Fine, thank you for this. We simply aren't going to buy your bonds again, right? And we need to avoid orange washing, right? So what we need to do there is get to a place where we're saying, okay, fine, we need to recognize that investors' investment decisions are no longer merely pecuniary. I mean, I think the poll was fascinating in that respect. Regulators need to recognize that actually, from a securities perspective, this does form an important part of the investment decision as well. And so if investors are misled as a result of that, there really does need to be consequence. And I think that is not something issuers want to talk about. I can tell you now, it's not something investment banks want to talk about either. But I think in reality, over time, that is what's going to create increasing confidence in the market.
Exactly, and it also matters what type of investors you attract, right? Because you do want to attract the investors that do care about this, that are driven by impact and return and well-managed risk, rather than purely return investors that will have different demands from you as an investee. Go ahead.
Right. To that point, I think we want both kinds of investors. I think somebody who wanted several hundred basis points above the truly safe asset return in 2020 would have done very well investing in WLB2 without any consideration for orange or green or anything. So at the end of the day, returns have to be attractive. It would be a very small market if we only have do-gooders investing in it for gender reasons.
Yeah, spot on. Spot on, exactly. And Anna, just to round it up to you before we go to the questions from the audience, international cooperation is such an important part of this global market, and we do want to make it a global asset class and a global market for Orange as well. So how do you see the role of financial hubs like Singapore, cooperation, development agendas such as Sweden coming together to really advance this Orange movement, but more broadly address this intertwined climate and gender challenges?
Gender equality has been a high priority of the Swedish government for a very long time, and so is climate action. And that is reflected in the regional strategy for development cooperation in Asia and the Pacific. And when we work with partners, we do that by integrating the two, always looking at gender aspect when we look at climate and the other way around, actually. And of course, development assistance, or ODA, it's a drop in the sea if we're talking about financing the sustainable development goals. So we work with traditional partners like civil society organizations who are really on the ground understanding the issues. Also with UN agencies. We have UN Women here who work with UNDP on a program called Empower, which looks at women for climate-resistant societies. But given that development assistance is so little, we need to work with new actors to mobilize new capital. And we do that on a larger and larger scale. And when we first got in contact with IIX, we also had a partner who could then report on the results, because that's important. Working with taxpayers' money, we need to tell them what is their investment sort of creating. So from our point of view, it's not just about returns, of course. It's the returns in terms of development on the ground. And we also see now some collaboration between IIX and the UN Women, UNEP, to sort of mobilize and see how can we further this to really work with the women on the ground. And that's the whole purpose of this. But we are constantly now trying to scale up the work of mobilizing new funding, also working with the private sector in different ways to create change. And we see more of that interest these days. So yeah, the collaboration here with the Orange movement and working on orange and green is really along the path we want to take.
And many times I sit on these panels and we hear a lot that actually funding is not an issue. The money is there. It's just where it is allocated. That is the challenge that the market needs to address. Is it going to the development areas that we need? And we heard that the SDGs are unfortunately not going to most likely be achieved by 2030. I want to remind the audience that there is a QR code there where you can put some questions. We had some questions coming in already, but please do continue to bring those in. There is actually a very specific question for Taimur there, and please, would you like to take that? Basically, the question is, how do you see the intersection between orange bonds and carbon credits, nature-based solutions?
So I got to say, when I first saw
I recognize
question,
it might be a perspective from an
really
economist that...
But I'll share with you a narrative of what DBS is doing with the palm oil plantations in Indonesia, and I think there is some relevance to that. So, you know, when you look at what we call social impact analysis of, you know, decarbonization, a bank like DBS would look at a given sector, a full vertical of, say, palm oil, and talk about or try to get data on the upstream and downstream aspect of the sector to see where are the biggest sources of emission or pollution, and what can be done to improve that, and is there certain favorable treatment you can do to the borrowers if they're actually moving up the value lens or value ladder in dealing with that. Now, it turns out in palm oil plantation, there are certain aspects of palm oil production which are very gender biased. There are some areas where there's a lot of men who work, and there are certain areas where a lot of women who work. So there I can see that intersection between Orange and the nature-based solution, that if we are going to do a significant improvement on the palm oil side, there might be an area where we can target which is gender-based, and there will be other areas it doesn't have to be. So that's like the only example that I can think of in the context of DBS, but perhaps there is much greater expertise on this panel to answer that.
Well, thank you for that. Well, I can share ANZ's perspective. I am a moderator, but maybe I can jump in there as well. We see a lot of intersection between the social benefits that the carbon credit market can bring and the gender agenda. As pointed out at the beginning, there's a lot of intersection between climate pressures and vulnerability of women. So I think what's the missing piece there is information. We don't dig deep enough to dissect that impact. We take the environmental impact and analyze that very well, but there's still work to be done when it comes to the benefit that this type of projects and this type of funding has for women that are involved, and they are definitely involved. If we look at the nature-based solution from an agriculture sector, which in Australia is quite prominent, and a lot of opportunity with regenerative farming, with a lot of opportunity in nature-based solutions in agriculture, women will be a key part of that equation, and not only in the Australian market, but then how do you export that knowledge, for example, in a Southeast Asia environment, which is predominantly agricultural based. There's another question on screen, and I think it brings back to the questions that I kind of had at the beginning. The question is, how do we what can be done to bring more orange bonds in the mainstream? So this is kind of the supply side, but I'll add into this the demand side as well. How do we also bring more investors into more capital to be allocated towards this? So you can choose whichever side of the demand supply equation you want to kind of articulate what more can we do.
I think from the industrial, from the one who executed it, maybe. At first, maybe, I think there is still a lack of knowledge for the financial institutions about these orange things, because what we always know is only the green and sustainability and then the ESG things, but no, there is no like widespreading or big movement, not yet, until now, recently, because I know these orange forums because of these things, But in Indonesia, I think, for example, in Indonesia, when I talk with my friends in the banking sectors, they don't know about the orange things. They just know about the social bond. They just know about the green bonds or sustainability bonds. They never heard about the orange bond. It means that the knowledge, the information about the orange bond, it's still very, very limited. Very limited maybe to the certain community, to the certain industry. And I think this is one of the homework maybe, how to widespread the movement, the orange movement to the world. And with these things maybe, and then the financial industry, they will try to label themselves as maybe the orange supporter or everything, because I believe all of the financial sector, they have gender-lens product, they have it, right? Even if you see in Indonesia, actually when I was in the banking sector, I ever tried to analyze that women borrowers, they have a tendency to have a 25% better of the loan quality than the men. So it means that in Indonesia, we can sell it actually about this gender lens product, and we can promote these things that maybe all of the financial industry, for example, in Indonesia, they need to more focus on women, because in terms of the fact that women have a better quality, women can be more trusted than the men. And everything, and even I have an impact that after we give the loan for the women, their family economic resilience is increased from previously only 1 up to 2 weeks, and then a change to 1 to 2 months. So and this research is way much better when we try to analyze the impact when we give the loan to the men. inside of the loan quality, inside of the impact to their family and everything. So this is our homework together to make this orange movement become huge all over the world, and that's why the supply and demand will match. I don't know. Thank you.
Anna, I see you want to jump in. I think all of you want to jump in.
No, I think having a knowledgeable panel like this, I mean, one reflections I made when we've discussed the women's livelihood bonds, I mean, the risk sharing we had with the first bond we were part of was higher than with the second bond. And somehow, my perception is that by sharing some risk initially, it will show that it isn't such a high risk. So this will be sort of a common product that doesn't need development funds. And we've seen that in other areas where we've supported loans with guarantees in the past, where we actually could take away those guarantees because the market then function. There isn't a greater risk that is now perceived in lending to women. So some reflections on that would be interesting.
So in the financial industry, we use this ratio called Sharpe ratio, which is returns adjusted for volatility. So going back to that Bloomberg report that came out 2 weeks ago, their point is not only that companies with higher gender participation have better returns, but with lower volatility, meaning it's a better Sharpe ratio for investors. So this is the kind of stuff that needs to go toward mainstreamification of orange bonds or orange initiatives. And this is an insight that microcredit had going back to the 70s and 80s, starting in Bangladesh and elsewhere in the world, which is women are better at credit risk, by and large. Not absolute terms, but in certain circumstances, certain environment, they're a better credit risk. If we see that show up regularly in both microfinance and regular finance data, I think that'll go a long way on creating a mainstream appeal for instruments like this.
I think there is a panel in the afternoon around plugging data gaps and so on, because there is so much, there is a lot of research and data around it, but somehow not enough to permeate all the other aspects of thematics that we see investors care about.
Yeah, I mean, I think just to pick up on a couple of these points, I mean, I think interesting through this morning and then even the panel now, it's interesting how we try to analogize orange bonds with green bonds, right? Use of proceeds bonds, laudable objectives, what have you, and that's all as it should be. But actually, I think from a credit perspective, right, from a credit structure perspective, I actually think the analogy is probably more appropriate to be made with non-bank financial companies in South and Southeast Asia. For those working in the fixed income markets, right, NBFCs we've seen in India are of the most sought after credits in the US, on the G3 currency bond markets, right? And those are by and large microfinance lenders, right? And it's effectively repacking those assets. That structure is nowhere near, those structures are almost purely corporate or non-bank credits. It doesn't have anything near the type of credit enhancement that the WLB series has. But it has experienced enormous growth, and just this year we started working on similar transactions in Thailand, and I think we'll be doing similarly in Indonesia as well. So I think again, and perhaps to the point that was made, is we need to maybe think about it in terms of, again, building out information, building out investor knowledge, and then to the question you asked, is to layer over that the data talking about how women are fundamentally better credits. My wife will certainly agree with that. Is creating that knowledge and ensuring that the market understands that.
Well, with that, I think we can bring the panel to a close. Thank you all for listening in. Feel free to connect to the panelists after this over lunch. And thank you.